Good morning, Saturday morning at 9:14 We would like to tell people that CMG was a great short during the last quarterly earnings, and we did it. We put a bottom in, and we put in a daily base here, many days, a couple of weeks. We finally got that breakout that we were looking for, and we did. And Friday's breakout, a lot of it is probably options related, but it was up $24, going up with the broader market because it's a leadership stock in its group. Yes, there are a lot of fundamental headwinds that it addressed over here, and we made a lot of money on that short, and it continued to go down. It did not make the move with the broader markets right away. It consolidated these lows. And the daily breakout happened in 2 days. It started there, they gapped it up, and the biggest move in the whole thing here all happened during this time frame on Friday, on 9/7. So when I look at these daily charts, and we were buyers for this, is that when we pull back to support levels, is how does this, the 200-day simple moving average is this green line. It's way up there above the 350 handle. And what we refer to this is a major support level back in 2011 that we have gone up, and we're going to test this gap down. And what is a gap down? This is the high end of that gap down. That's going to be a short-term resistance though. Once we break through this, we can trade right up to 348 and right up to that 200-day simple moving average. The 200 simple day moving average is $368. And with the high frequency model tape, with the leadership stock that's underperformed, that got whacked in its last quarterly earnings, this name is ready to make a move again. And we featured this a few weeks ago when it was here consolidating and to look for those breakouts, and sure enough has occurred. Therefore, we will be taking a look at how to trade this name using calls. When CMG will pull back to the daily support levels after making a big $24 run on Friday, is we will start taking a look over here on this CMG Chipotle Mexican Grill calls. We will start taking a look at what some of these price levels look like on a weekly level. And one of them we'll start looking at is we'll start going clear down here to the 315, the 320, and the 325, and up and out of the money at the 330 on a weekly level. On any pullback level, that in the short term, we can look at the put side for an intraday trade only below the market, so that when we do get our transactions and we're buying cheap over here, we're going to hedge our capital dollar cost risk using this particular format on a weekly level for intraday. On a longer term level, if I want to go over here and I want to look at where that 350 call is, it's right here at $1. Now, yes, it was probably pennies on the dollar. I will take a look for us right here to find out exactly where that this call is. That's up huge. It's up and out of the money. And this call contract right here that used to be up here in this name before the earnings, remember, look at it, it was $60 a contract. This is how high these call contracts were at 350 before the earnings. So what am I looking at? Is that I'm looking at where this name, where I can buy this name up and out of the money with the least amount of dollar cost risk. And I can see that these were up here at $10 back on the first gap down. And that the lows of these contracts right here were as low as 4 cents, 7 cents, 10 cents, 10 cents, 15 cents, 20 cents, 10 cents, and they went up to $1 and they made a 90-penny move. But where do I get a chance to enter this for that three? And this is a regular 350 way up and out of the money now on CMG. Now CMG has done this in the past many times. And back to the chart here where we started, this is going to be this resistance area. And basically, what I will tell the MMTs is we will set alarms to try to steal that call because there's a lot of room to move. And on that call contract that was down there that closed at $1, we will start setting alarms down there at 10 cents, 25 cents, 40 cents. Because when this thing pulls back to support, we would look at where that $350, that's below the 200-day moving average by $18. And in this kind of market, without any kind of pullbacks, once they start these daily breakouts and they set these bases up, we look for the daily half bar to act as support. Right about there, 313. Or close somewhere right around in there. We'll use a MMT platform. That'll give us the right numbers. Okay? So, we're looking for a big trade on Chipotle Mexican Grill. It had the $24 breakout. That's what we're always looking for. It came up out of that lateral base 2 days. It started with the gap. It held that high right here on that low. And you can see that's what we loved so much about it. And that's that top resistance level. And this is where that gap down happened over here now, MMT. I'm sorry that the video is a little bit longer, but I need you to study it. Because you're going to want to know that that's that part of that gap from where the earnings were, and we sold short. There's to that low part. And more importantly is from the same area, we're going to draw a trend line right through here. And we're also going to take that same area diagonally and put a line right there, and they can all connect. So on a daily chart, we have a bull trend breakout. We also have what we call this ascending MACD. It's not in the buy signal. It's working off the oversold from over here. It was totally oversold. And it's been working off the being oversold condition. It's been working that off in this public standard indicator that the public will look at. We don't put a lot of emphasis on it, but the only part of it is that it does have some meaning, relevancy to high frequency models, which is totally different. So, what I will say is we will be trading this bull. It is the biggest bull breakout of the week, and that's Chipotle Mexican Grill. And we're going to be looking at up and out of the money where it's very cheap. If we can get those cheap, and they were down here at 10 cents, 5 cents. And there's 1,100 open interest. So, you know, making money on buying that deflated interest there, that down there. When you're buying cheap like that, you got the upside when you get the daily breakouts like we did on Friday. Super breakout, Chipotle Mexican Grill. Players are back in. Buy the dips, sell the next higher rips.